Consolidating your credit card debt into a single loan can help you get out of debt faster, but it isn't a silver bullet. You've got to do it the right way with the right company. I'm going to give you the pros and cons of using OneMain Financial for credit card consolidation. Let's be positive and start with the pros. OneMain Financial primarily serves people with fair, poor, or damaged credit. If you've been denied by mainstream lenders, you might have a chance of getting a loan from OneMain. They are much more familiar with people with less than perfect credit histories. Of course, if you have good or excellent credit, you are almost certain to be able to get a better loan from another lender. More on how to shop around for the best rates below. OneMain offers loans with APRs between 18% and 35.99%. While those interest rates aren't great, I have included them in the pros column because they are likely the lowest APR someone with poor credit would be able to get. The rule of thumb that I like is that you should only consolidate your credit cards if the company is offering you an APR that is at least 2 or 3 percentage points lower than the credit card interest rates that you already have. OneMain accepts cosigners on their loans. If you can qualify for a credit card consolidation loan and get the best rate on your own, there's really little reason to entangle your spouse or loved one in the process. But more often than not, the cosigner can allow you to be approved when you otherwise wouldn't have been, or to earn a lower APR than you otherwise would have. This is especially true if your cosigner's credit score is better, debt to income ratio is lower, or their income is higher. OneMain will make the decision on whether to lend you money on the day that you apply. If you accept the loan, you could have the money in your account in 1 or 2 business days. Now let's turn our attention to the cons of using OneMain to consolidate your credit card debt. OneMain Financial does offer the option of securing your credit card consolidation loan with an asset. In fact, you are almost certain to need to secure larger loans with the title of your motor vehicle. In some cases, having a secured loan option could be a good thing. It can increase your chances of being approved, or you can be approved for a larger loan amount. In the case of OneMain Financial, I put it in the cons column because it will likely be required at the higher loan amounts. And it's not always a great idea to turn unsecured credit card debt into a secured debt because you risk losing the collateral. OneMain offers better interest rates for people with damaged credit than they can usually get from other lenders. The problem is that OneMain appears to make up for the lower interest rates by requiring collateral and then selling insurance on that collateral. You will need to talk with a sales associate at one of their stores who will likely try to push these added services onto you. But they don't have much information about this on their website, so it's really hard to research it beforehand. This leads to my next con. OneMain is not terribly transparent about the cost of its loans before you apply. It is very difficult to understand what kind of interest rates you could expect to get, what kind of fees you might need to pay, and whether you will need collateral, and whether you will feel pressured to buy the insurance. OneMain is regulated at the state level, so many of their policies will depend on which state in which you live. Those policies are known, and they could have shared them on their website, like many other lenders do, but they don't. OneMain charges several different fees. They will charge an origination fee as much as 10%, but again, the size of the fee will depend on which state in which you live. They will also charge you a late fee if you have trouble paying. You are also likely to get hit with a double whammy of a non-sufficient funds fee if they try to pull the payment through ACH, but you don't have enough money in the account. OneMain does not have the option of paying off your credit card balances for you when you take one of their credit card consolidation loans. It's convenient when a lender will pay off the balances for you, but I think of it as a con when they don't for another reason. They are less likely to approve you and less likely to give you the lowest interest rate. Why? Because they can't guarantee that you will take the money and pay down your other debts. So they probably don't consider debt payoff in their assessment of your debt to income ratio. You can apply directly to OneMain Financial on our marketplace page at the Yukon Project. Behind the scenes, we will check your rate with up to 40 other lenders. The application will not affect your credit and will show you all of the approvals so you can select the loan that's right for you. This is a great way to test the marketplace and see who will offer you the best terms. Remember, there is no rule that you have to consolidate your credit card debt. If a company isn't offering you an interest rate that is at least a few percentage points better than what you're paying on your credit cards right now, don't consolidate. Just focus on making extra principal payments every single month so you can make meaningful progress towards living a debt-free life. If you found this video useful, please like it and consider subscribing to our channel. Thanks for watching.